So during my last video on Regeneron, I explained why I believed Regeneron would destroy their Q3 earnings estimations. And I predicted that a nice uptrend in the share price of Regeneron would follow. Fast forward to today, Regeneron did destroy their earnings estimation. And if you bought Regeneron shares on the day of my video, the 24th of October, you would be up roughly 10% today. Certainly not bad if you ask me. But the story of Regeneron just keeps getting better and better. Last Friday, Regeneron announced a $3 billion share buyback. I will explain what that means and how you can profit in this video. Hey value investors, how are you doing? My name is Stijn and welcome to my YouTube channel. Now let's get into it. The big headline, Regeneron announces a $3 billion share repurchase program. For those of you that don't know, a share repurchase program is a stock buyback program. You see, when a company first goes public, they effectively sell tiny percentages of their company to us retail, but even to institutional investors. With these coupons called shares or stocks, we investors gain the rights to a certain percentage of the company. We gain the right to a certain percentage of the balance sheet, to a certain percentage of the cash flows, etc. But sometimes a company decides to buy back their own shares. The company can just buy the shares on the open market like we do, or they can strike a deal with a hedge fund, for example. Either way, we shareholders are happy. If the company buys those shares, it just means that there are less shares out there in the world. There are less shares outstanding. Less shares outstanding means less shares we have to divide the company through. And that means that you and I now own a bigger piece of the company just like that. Of course, buybacks aren't always amazing. Sometimes they are quite inefficient. I will explain when they are awesome and when they aren't in just a bit. As we have already learned, the company authorized a repurchase program of up to $3 billion of the company's outstanding common stock. With the strength of our balance sheet and our business, we see this as an opportunity to continue to invest in Regeneron. The share repurchase program is part of our broader capital allocation strategy to maximize shareholders' value for years to come. And this is basically fancy language for the share repurchase program is part of our broader strategy from which we intend to make you shareholders rich. Repurchases may be made from time to time at management discretion through a variety of methods. And these include open market transactions, privately negotiated transactions, accelerated share repurchases, and other transactions. This is really important to understand. The program has no time limit and can be discontinued at any time. There can be no assurance as to the timing or number of shares of any repurchase. So there is no guarantee that Regeneron will actually buy these shares. Keep that in mind, nobody can force them. This is not binding. Although I am sure the management can see that Regeneron is criminally undervalued. Just like we will see in just a bit. We will go through my valuation later on this video, so do make sure to stick around. Also good to note, $1.8 million remained available from the last $1.5 billion share repurchase program from January 2021. Seeing as they've used almost all the funds from the last buyback program back in January, I am personally really confident that they will execute this $3 billion buyback to the best of their abilities. Although the buyback will take time. They will most probably not buy all those shares in 1 week time. I think we can expect this buyback to be executed from now until Q2/Q3 of 2022. And now I'd like to focus on when buybacks are amazing and when they aren't so great. As a rule of thumb, share buybacks are amazing whenever the company is undervalued. If a company is undervalued, often one of the best investments the company can make is in itself. Warren Buffett himself actually does share buyback programs, often with Berkshire Hathaway. However, share buybacks are bad whenever there's a better investment to make. If a company has two opportunities, one where they can get a 30% return or one where they buy back their own shares for a 10% return, they would be stupid to buy back their own shares in this scenario. A company's job is always to maximize shareholders' return. In this case, the company should invest in their operations and get 30% that way. Also, buybacks suck if the company isn't actually undervalued. I mean, don't get me wrong, share buybacks will still decrease the shares outstanding and therefore increase the percentage of the company we own. But if the company itself is overvalued, there is little point going for this option. If a company is actually overvalued, it is almost always better to just invest in operations instead, or to simply declare a dividend. Now, is Regeneron actually over or undervalued? Well, let me tell you, Regeneron is criminally undervalued. Ever since 2014, Regeneron was able to grow their EPS at an average growth rate of 40% per year, meaning they've increased their earnings per share at over 40% for almost a decade. And they aren't slowing down. Actually, it seems that the EPS growth has only increased in speed in the last couple of years. But let's be conservative and assume they grow the EPS at 15% for the next 10 years. Again, this is less than half of the average EPS growth rate of the last decade. Slap on a fair PE ratio of 20 and I think we can see a share price of over $5,000 in the year 2031. That means we are predicting a 740% upside if we buy in today and just forget about it. But of course, we aren't done there. In today's value, I think Regeneron should be worth $1,300 per share. And if we take a healthy margin of safety of 50%, we get to my buy target of $650 per share. And remember, we are being extremely conservative on all these metrics. So at the current share price, I predict we have an upside potential of 100% on the short term and 750% on the 10-year time frame. So yeah, I think Regeneron is extremely undervalued. And therefore, I think the management team is doing a great job by recognizing this and creating this huge share buyback program. Now, how can we actually profit from this $3 billion buyback? Well, good news, it's not hard at all. My strategy for milking this buyback for what it's worth is real easy, so listen closely. Step 1, you buy as much Regeneron stock as you would like to own. Step 2, do nothing and sit on your hands. And step 3, profit. I am serious. Just own the amount of shares that you would like to own, perhaps that's 5, 10 or 25% of your portfolio. And then just hold. Make Regeneron do the work for you. Let Regeneron grow their EPS. Let them diversify their product lineup. Let them do the hard work. As we've learned from this article, we cannot know when Regeneron will buy the shares. So we cannot know when to buy and when to sell. So why bother? Regeneron has amazing potential on both the short term and the long term, so why ruin that opportunity by getting in and out? I'm personally planning to hold Regeneron for the decade or longer if the company continues to outperform. And this way I'm extracting as much value out of this buyback as possible. I will be there for the full ride. And the full ride of the next buyback program. And the next buyback program. And the one after that. You get the point. Enough from me. I really hope you guys enjoyed this video. And if you did, please give it a like and maybe subscribe. Comment down below what you want me to talk about next, and I'll see you guys in the next one. Peace.